Hi everyone, this is Michael Kramer of Ma Capital. Today is Tuesday, July 29th, and it's around 4:15 New York time. So on Wednesday, July 30th, we'll be getting a lot of data that will really start giving us a sense of the health of the U.S. economy, and these data points will only continue to increase as we go through the rest of the week. We'll be getting ADP. That's expected to rise by 75,000 for the month of July. That would be a big improvement over last month's reading of a negative 33,000. Then we'll be getting second quarter GDP growth estimates, 2.4%. That would be an improvement from last quarter reading of negative 0.5. We'll also be getting the GDP deflator. That's expected to come in at 2.1%, down from 3.8. Then we'll also be getting the core PCE quarterly reading. That's expected to rise by 2.3%, down from last quarter's 3.5. Then on Thursday, July 30th, we'll be getting challenger layoff numbers. We'll be getting the monthly June core PCE readings. That's expected to rise by 0.3%, up from last month's reading of 0.2. Core PCE year over year expected to rise by 2.7% year over year versus 2.7% last month. PCE is expected to rise by 0.3%, up from 0.1, and PCE year over year is expected to rise by 2.5% from 2.3. And then on Friday, August 1st, we'll be getting non-farm payroll numbers. That's expected to show increase in jobs of 110,000, down from last month's reading of 147,000. The unemployment rate is expected to tick higher to 4.2% from 4.1. while wages are expected to rise by 0.3% month over month and by 3.8% year over year, both a tenth higher than last month. Also on Friday, August 1st at 10 a.m., we're expecting ISM manufacturing. That's expected to increase to 49.5 from 49, while the prices paid index is expected to rise to 70 from 69.7. Of course, also we'll be getting on Wednesday, July 30th, results from Meta and Microsoft, and then on Thursday, July 31st, we'll be getting results from Apple and Amazon. So lots of stuff going on this week, big data reports, big earnings. This is really going to probably largely set up, how the rest of the month of August probably trades. Basically, if the numbers come in good, we can continue to see the market just continue to grind higher. These numbers start raising questions about the health of the economy or the strength of corporate earnings. We could see things get a little bit volatile, at least over the next couple of weeks. In the meantime, we've been seeing the euro largely give back some of the recent gains it's had. We had noted last week that it had broken this big uptrend we had come back up to, and it looked like we had retested it. For right now, that's the level that's really holding. You can see the euro has broken down again. In fact, today we even closed below the little neckline that had formed at 115.80. And it's quite possible here that we have formed a double top. And if that's the case, we could probably expect maybe that the euro moves back down towards this 113 area, perhaps even as low as this 112 region. But again, just looking at this right now, it's looking like the euro is going to continue to weaken versus the dollar. When we look at the pound, also a very similar look. If this was our neckline here at 134, it looks like we could be seeing the pound continue to weaken versus the dollar. You could make a case that maybe this is a head and shoulders type of pattern. And so again, if we measure from here to here, it suggests maybe we see the pound weaken to around 130.5 versus a dollar. Again, broadly speaking, the momentum in it has been fairly weak. We're below the 10-day exponential moving average. The only solace here is that we're hitting up against the lower Bollinger Band, and that may offer some support briefly, but the RSI would suggest that we're not nearly in oversold conditions yet, and that the pound could continue to weaken. When we look at the Japanese yen, also in an important point, we haven't broken out to the upside yet, but if we break above this 148.5 level, it looks like we could probably move all the way back up towards 151. Again, we're not really in an overbought condition yet for the yen. Bollinger Band still says there's room to rise. We're above the 10-day exponential moving average, so a lot of these indications are suggesting we continue to see the dollar strengthen versus the euro, the pound, and the yen, at least over the next couple of days until we get some more economic data to potentially either strengthen that move or to derail it. And with the rise in the dollar, we're seeing gold weaken a little bit. Gold has really been trying to hang on to this 33 and a quarter region, and whether or not it continues to hold that area is really up for debate. We can clearly see that the momentum in the gold has really declined. It looks like we're potentially have further to fall. We're below the 10-day exponential moving average. The Bollinger Bands are really tightening up, which suggests that volatility could be getting ready to expand. If the dollar continues to strengthen, I think it will be hard for gold to rally. It had a really good attempt last week, and it failed at this 3,430 level again, which means that we could really see gold head towards this 3240 region, maybe even down to this 3170 region. Also, on Tuesday, July 29th, we heard President Trump potentially mention that he might be thinking about putting further sanctions on Russian oil. They don't come to an agreement with the Ukraine soon on a peace deal. That led to Brent oil rising by about 3.5%, climbing above resistance at 71, at 70.5. And so it looks like right now we have momentum trending higher in oil prices, 60.5 on the RSI, certainly not an overbought condition. We are trading above the upper Bollinger Band, so we would like to see this maybe settle out, trade sideways for a couple of days, and then resume an upward move. If that's the case, we are above the 10-day exponential moving average. The trend line seems to be holding here, which also suggests that maybe we continue to move higher. Given that we saw this big sharp decline following the easing of the tensions in Iran, it's quite possible that sometimes these big movements are almost treated as gaps, and we could actually see Brent maybe return towards that $80 a barrel level in the not too distant future. But it doesn't mean it happens right away. We could just see some consolidation at 72 for a day or two and then start moving up again. So right now, most signs seem to suggest that we could continue to see oil strengthen over the coming days. When we look at the DAX, we had talked last week about the potential megaphone pattern that resembled the megaphone pattern from earlier in May. For now, it looks like that pattern may actually have some merit to it. You can see that we came below it the other day. We came back up to it, tested it yesterday. That failed. Now today we tried to also move up again. That didn't really take hold. Right now we're trading right around the 10-day exponential moving average, trading right below support at 24,250. Momentum is clearly shifting lower. Bollinger Bands are telling us that there's still further room to decline. It looks like maybe the DAX has finally started to give way a little bit. We haven't really seen the DAX move up or really be part of the rally in the that we've seen in the US markets since mid-May. And it's quite possible, again, that we're forming some sort of double topping pattern here on the DAX. We really need to see the DAX, though, break below this 23,065 level to give us some sort of confirmation that indeed we have formed a double top. Until then, it looks like we're just really moving sideways. And until we break out these highs, break above these highs at 24,550, I would think that we could probably think that maybe the DAX is going to retest this 23,060 region before all is said and done. The Footsie, for the most part, has continued to move higher. Not really surprising. We've seen a lot of really big strength out of copper, given that the U.S. is looking to impose tariffs. So as long as the Footsie stays above the 10-day exponential moving average, you probably expect that the Footsie is going to continue to rise. The RSI is around 70. We're not really above the upper Bollinger Band. So really, when you look at the Footsie, it kind of looks very well positioned to continue to move up. And in fact, when you look at where the band is, maybe it suggests we kind of crawl our way higher up towards this 9,200 region over the next couple of days. When we look at the Nasdaq today, we put in a bearish engulfing pattern. That's when you see the market rise, take out the highs from the previous day and then close below it. So that's what that is there. We did also reach overbought levels. We've seen the RSI climb above 70. So lots of indications to suggest that the Nasdaq is overbought, at least on the daily basis. Also, when you look at it on a monthly chart, also overbought on a monthly chart, RSI above 72, trading above the upper band. So these are kind of signals that we would look at and take away and get a sense that, it's time for some sort of a pullback or something a little bit more Right now, though, we're above the 10-day exponential moving average, and as long as we're above that level, you have to assume that the trend is still higher, but we do have some indications finally that maybe that trend is going to start to shift given today's price action. So if we get below this 10-day exponential moving average, I would start looking towards lower prices and maybe looking towards 22,100. If we stay above the 10-day exponential moving average, then it just seems very possible that we're just going to take out the highs at 23,450 and just keep moving up. The S&P 500 is also in overbought position on the daily chart, although it's not overbought when you look at it on the monthly chart. But again, we're in a similar situation as the Nasdaq, where you have what looks like a bearish engulfing pattern that formed today. Again, these things don't always work. We had one just recently that looked like it might work and it didn't. Type of patterns work sometimes, and sometimes they work well and sometimes they don't work at all. So just keep that in mind. I would say that as long as you stay above the 10-day exponential moving average, the bearish engulfing pattern probably doesn't really mean very much. If we obviously fall below that, then we could start looking to lower prices, maybe into the 62.50 area. Maybe you even get some sort of gap fill at some point at 6,030, but that's quite a ways off right now. And so again, the main point here is that the S&P is overbought, and we should start considering the idea that it's probably due for some sort of sizable pullback. When you look at the Dow, it's already giving you some of those warning signs. You've seen the Bollinger Bands really compress. You've seen the RSI really turn lower. So in a very different position than what you're seeing in the Nasdaq and the S&P. And I think largely that has a lot to do with the fact that the Dow just has a different weighting for NVIDIA than what S&P and Nasdaq have. And so you're seeing that difference really play out. We haven't even seen the Dow reach a new all-time high yet. It came awfully close, but it didn't do it. Now we're sitting on the 10-day exponential moving average. If we break these moving averages, I would think we probably move down to the lower band at 44,030. Again, momentum is telling you that the Dow continues to move lower from here, and that we've probably put in some sort of short-term top. Anyway, that's all we're going to have for this week. Until next time, have a great week. Bye.